Hello out there, traders, and welcome to the Apteros Daily Market Insight for the ES. It is February 20th, 2024. We're not going to start with a recap today because we didn't really have an official DMI yesterday. So we're really just kind of working with a prep rep that we had from yesterday, and then we're going to kind of continue it with what's going on today. So the ES today finds itself, for me, in a dissonant zone between some higher time frames. So this is really where the dissonance is overall within the ES. And, the edge in one direction or the other. Right now, the bears have a little bit more control, so that's going to be our main driving idea in terms of scenarios for today, heading down into this dissonant bull line in the sand. So right now, where we currently sit, going over the scenarios, this is our main list for the overall bearish idea. And scenario one is that we hold below that particular list. Scenario two, obviously, would be a move to the upside. We'll talk about that in a second. But being in a dissonant zone, scenario one to the downside, we have some things to consider whenever it comes to references along the way. For example, we have a bearish reference here that is important to scenario one. So in other words, in scenario one, if we get a pullback into this zone here, this would be a nice spot to be looking for the bearish move. If that doesn't hold up, then it's a full-on test of our line in the sand and looking back into scenario one. If we continue right from where we are now, we get below this neutral reference. That's an opportunity for a continuation down into our bullish line in the sand and the completion of what we're expecting out of scenario one. Okay? So now take a look at scenario two. If for whatever reason the market just rallies up here and we start seeing that acceptance picture up from scenario two, then we would be looking essentially at a destination just up above here into that 5080s, 5074 type of zone, looking to clear out these highs here and continue to the upside. Now, taking a look at our lower edge, scenario one, like I said, being the continuation to the downside here into this dissonant bull area here. Taking a look at the bull area, that is its own line in the sand as well. So we're going to be looking at scenario three being a hold of that zone, heading back up into this first neutral reference. Then if we start getting back above, we'll start testing some of the bear ideas as well if scenario three holds down, or holds up, sorry. And then taking a look at scenario four, if we do get below this list and start holding below it, looking at neutral references, and then the overall destination for scenario four is down into here, into that 49, let's just call it 46-ish area, in between that zone right there. And that's the overall landscape we're looking at with today's prep. It isn't a straightforward day for us on the ES. It is dissonant technically in between these two areas, conflicting biases and so forth. Right now, as things stand, there is more confluence to the downside. So essentially, the way I described it to the students was this area here is kind of the most neutral on the day. As we get higher coming into this line in the sand, we look for more and more bearish opportunity. As we get lower into this line in the sand, we look for more and more bullish opportunity. If we get above these, obviously that switches, right? We go to bulls up here, and if we get below these, we go to bears down here. But that's kind of the overarching context and structure what we're looking at. And where we sit right now, things are more to the bearish side, heading into a completion into this bullish zone. And then once we get there, that's where we start to monitor whether or not we come out of there or we start heading to the downside. Now, that's the overall idea. Like I said, this middle area here really is the more neutral territory. So we could end up seeing the market kind of come back up, push up into here, come back down, come back up or down. It can be very back and forth in between here as these bigger, higher time frame ideas are kind of working each other out. So in between, there's opportunities to scalp between references and so forth. But the reality here is the better scalp would be to the upside from this neutral reference and to the downside from this bearish structural reference. And that would be kind of the areas you want to be paying attention to inside of this more neutral type of territory. After that, the scalp to the upside here, along with heading back into that line in the sand, and then the scalp to the downside heading into the overall, destination for the bulls. That's kind of the overall landscape what we're looking at right now. So if this was kind of unclear, just a quick, overarching summary. We are bearish in scenario one, heading down to this destination. That's the overall idea. Inside of here, it's much more neutral, so it's not advised to really be, looking for bear opportunity everywhere. Use these references with acceptance in the middle areas here, looking for continuations possible to the downside along with scenario one. If they all break down, we head to the upside into this line in the sand. That's where you'll get your actual test. And the same kind of thing holds true to the downside. So if we get this move down into here to the bulls, that's where you're looking for the test of that overall idea for the bulls heading back up into target areas there. And that's kind of where the what is picture is with scenarios 1 and 3. And of course, scenarios 4 and 2 are the alternate breakouts from the dissonance on the higher time frames. All right, trade well out there, mind your risk, and hopefully you have a really solid game plan for today. Let's get after it.